Everyone, Lance Ippolito here, and I want to go over why I absolutely love to add to losers. Now, if you got my alerts this morning, you know EA, I was down pretty big on this one, and now you can see, as the stock sold off, I asked myself, why did the stock sell off? Well, if the stock's selling off and you're in a position, and it's only selling off because the overall market is selling off, then that is a prime opportunity to add to your position. So if you recall, we're up about 26% now on the position. I was down over $3,000 today. Now you can see I'm up over $1,700 today on the position. So if we go back to the call, we had an opportunity, and let's pull up EA on the chart this morning, and you can see the why. And I wish I would have done this to Nike. I sold the calls around 38 cents. Now they're almost 60 cents. That's over a 50% rally since this morning's action. So if we look at EA, nothing changed, right? The goal was to hold this position through earnings. It just so happened the Nasdaq was down over 2% this morning. Overall market was down 2%. So of course, EA is going to gap down. Well, as we had that gap down, I thought, this is a prime time to buy more. Why? My intention was to hold through the earnings, which hasn't happened yet. The overall market was down, and I was able to get these calls about a 30% coupon. We had a rally, as you can see here. The calls were actually up around 33% at one point, and that's just a prime example. For another example, Palantir. Palantir was a name that I put on my bank or bust, which I wanted to get this morning. We saw some calls Friday. The stock was rallying. If you bought the calls, you almost had about a 30% discount this morning. Now those calls went from negative 30% to up 20%. So most people are going to say, don't trade on Fridays, don't add to positions. Couple things. One, you always want to try to cost average in, unless you're doing, let's say I was trading NVIDIA, right? We'll give you an example not to. And I bought weekly calls in here, and then the stock just faded on low volume, and the calls were getting eroded away, and they were super far out the money calls. Yeah, if you're doing weekly options, that should only be a day trade, then don't add, because quite frankly, if you're wrong, you're day trading, who cares? And again, a stock like the NVIDIA, you have no edge. But a stock, let's say like AMD, I love this one, right? We saw some order this morning. Let's say I bought calls in AMD up here, and let's just say I paid $1. The stock sold off because of low volume. You can see these red candles indicating low volume. As we get in the afternoon, let's say those calls went down 20%, and now they're 80 cents down here. You're darn right. I can get in for a 20% coupon, and I still get what's upcoming in AMD? Well, the earnings event. So of course, I want to use that position because the catalyst hasn't happened yet. So ask yourself, next time you're down in position, is there single stock news affecting it? If so, pass. If it's just down because the market is down, or maybe the bid ask or volatility came out, if it's down that way, prime example to add to your positions.